Markets are still sulking with the Nifty down about zero point 0.4 at this juncture, lowest point of the morning. 10,700 is approaching. We are at 10,710. And the mid-caps are the ones which are the weakest lot today, down about 136. But this comes as a shock because what we thought would be a big positive surprise for the market was the way in which crude prices have sunk below $54 a barrel over the weekend. Now just a shade above 54 and change. Mark Matthew of Bank Julius Baer and Company and Peter McGuire, the CEO of XMAU West, join us now to decode how crude might go and what the impact might be on countries like India. Good morning, gentlemen. Thank you very much for joining us. Peter, let me come to you first. Each day we think that crude would trough out and it doesn't, to our pleasant surprise, actually. What's your sense? Is it likely to head even lower before it troughs out?
Well, good morning. I think a couple of things. First off, I don't think there's a consumer on the planet that isn't happy with the price of crude at the moment and what's happened over the last 2.5 months. The only problem is that there's a producer out there that's certainly not happy. He was looking at $100 a barrel, and now they're looking at the best part of 50 to 55. So it's been an enormous washout in that last 2.5 months. And now you're talking OPEC. I've just seen that there's been a meeting in the UAE, or the UAE, that rotating chair of OPEC. They've come out and said that they'll cut it by 1.2 million, do whatever's needed to boost prices. So I think that OPEC are going to take a very aggressive stance over the matter of the next week or two.
Okay, well, they may as well take an aggressive stance. I mean, oil production has been near record highs as far as most of the major producers are concerned. But Mark Matthews of Bank Julius Baer also joins in. Mark, hi, good morning. It's been good for us because give and take everything, because of the fall in crude prices, we've seen India outperform a lot of the emerging markets, outperform a lot of the developed markets over the past many months. You think that degree of outperformance could continue even in the first half of 2019?
It depends on the United States if you're talking about globally. So if the S&P is going to go down more, maybe India can outperform on the way down. But even that, I'm not so sure I can say that with a great degree of confidence, because for the last 3 months, there's been a lot of inflow into emerging markets. And I think emerging markets are one of the most popular trades going into 2019. So it's not like it is an uncrowded market anymore, let me put it that way. I suspect if the U.S. stock market falls, it'll take India with it.
Okay. Good morning to you, Mark. There are some things going in the sense, cheaper commodity prices is India positive. We also have an elections, and that's leading to a little bit of giveaways. Yields are coming down in the Indian market rather rapidly with the Reserve Bank pumping in money. And there is a lot of domestic mutual fund inflows, which is a bit new. Until now, we were more FII dominated. The last 24 months, we have gotten a lot of domestic money as well. Does all this make India at least an outlier? We may fall, but fall much less than others?
No, I would think I can think of 4 reasons just off the top of my head why I say no. The first is that if looking at the earnings forecasts for next year, they're too high in my opinion. I'm saying that simply because at the beginning of this year, the analysts were saying we'd get 20% earnings growth, and look what happened. Yep. So I think the earnings are overstated, therefore the market's more expensive than we realize. I, for one, did not like the governor of the RBI resigning just barely 2 years after the previous one resigned. And that leads me into my fourth and final point, which is that the reason why the RBI governors why they resigned is they were trying to clean up the financial system. It needs to be cleaned up still. Yes. And the longer that remains a wound, it won't heal.
Peter, hi, good morning. This is Sonia here. Just coming back to that point you were making about the possibility of OPEC cutting oil production by 1.2 million barrels per day. The cuts are expected to take place from January. Once that happens, what kind of range do you think Brent crude would hover in over the next, say, 2 to 3 months?
Well, I think first off, we've got to look at what happens. I think that'll stabilise the market first off. But the second part of it is what happens over the next matter of a week or two. US shutdowns. Where's President Trump going to be as far as Is he going to continue agitating the market? Is the Fed chair safe? All of these components, which are, front and centre right this second, need to work through the market. Then you've got the Brexit issues on the 14th of January coming back into play. I think that the amount of moving parts is going to cause, I feel, over the first quarter, continued volatility. And if you see a continued downdraft in US equities, that's going to put fear into the market further, which in turn, probably oil prices will continue to be, on that downdraft. So whilst they cut production, there are still too many moving parts in there that can also have a great impact to the price of crude in the short term. I think it's just a wait and see, but I feel as though in some ways volatility is going to remain. You're going to see whipsawing of prices.
But what would be the range you would work with, Peter?
Well, I think if you're going to look at Brent, you've got to say $50 to probably $60 a barrel if the market doesn't do anything extraordinarily strange. But when you've got a president like this and you've got so many other moving components of it, you could be sub 50 for Brent and you might be, low 40s or even, into the high 30s for WTI. There are so many issues at hand that need to work through the market in the short term.
Mark, I know you have been cautious on the markets for a while, the global markets as well. But do you see a bear market coming, or do you get a sense that this is only going to be a time correction that we'll have to witness over the next, say, 6 to 12 months?
The honest answer is I really don't know. We are either in a bear market, and we're well into it because the S&P is down 18% from its previous high, or we're just a couple of inches from the bottom and it was a correction. But even if we're in a bear market, I don't see downside being much more than 15%, given that, as I just said, the market's already come down a lot, and you have earnings growth this year of about 25%. So if you assume maybe another 8 to 9% next year, and you can tack on 2% for dividends, the market will be about 14 times by the end of next year. I guess what I'm trying to say is if it's a bear market, I think it's already quite advanced and we just don't realize it yet.
Oh, okay. Mark, we've seen lately some FII flows coming in. We don't know what kind of flows they are, and they're not a great deal, but they're not outflows. We have seen equity inflows into Indian markets in the past, in some days in December. If someone were to ask you that they want to put money in India, which sectors would you like at all?
Well, very boring. I think it basically what I told you the last time. We like the good quality banks, and we like the consumer companies. So I would stick with those two.
Okay. Well, the other big development over the weekend, and probably some people would have seen it coming, is the way in which the United States has decided to retreat from the Middle East. Afghanistan and Syria. Peter, what does this mean in terms of, geopolitics in the price of oil?
I think it creates a sense of uneasiness. We've got to look at where Erdogan's prepared to play in this minefield of much human misery, and whether Turkey takes an aggressive stance against Syria, or is Iran going to be able to ratchet up in their involvement in that area? Again, you've got so many components of that Mideast, from policy to warring factions, all the way through to try and get some form of stabilisation in that region. You could have something completely out of left field that we don't even see and on no one's radar at the present create mayhem in that region. And who knows, if the sanctions are really pushed and they continue to really start to bite and they're further aggressively pushed from the US to Iran, then that could cause major concerns across that Syria region as well.
Okay. Mark, this is the final question from my end. You did mention how you were not too happy with the way the RBI governor resigned, and all the events that took place surrounding it. From a foreign investor standpoint, how would you react to a lot of the other things that have taken place since, whether it's the liquidity infusion of PSU banks or even the GST cut that we saw over the last 48 hours? Would you the farm loan waivers, would you be worried about populist measures, or would you look at all of this as positives?
I think that the election coming up in May, obviously, will cause more populism, so it's hardly something to be surprised by. None of it surprises me. I view it as temporary. That's about all I can say about it.
Well, Mark, generally, I mean, the geopolitical question I was asking Peter as well. What's your sense about 2019? Are we going to get geopolitical hotspots, which would be the black swan?
Well, always hard to forecast. I feel like the situation in Syria, well, actually, I really just shouldn't comment on it at all, but I feel like the departure of, what is it, less than 2,000 troops, or around 2,000 American troops there, I feel like it shouldn't be too destabilizing. The Russians are still there. The government in Damascus has got the upper hand. I'd be surprised if you saw a really big comeback on the part of ISIS with the U.S. leaving.
Assets for 2019, Mark?
2019, difficult to say. I do notice that the put-to-call ratio on the S&P is as high as it's been since 2008. So people are definitely panicking and bearish. So I would have expected actually a rally into the end of this year. Okay. But, you know, there's so many things going on next year that, you know, hard to say.
I agree. It's a confused Christmas time, isn't it? Mark, Matthew, thank you very much for joining us. Peter McGuire as well. Both of you have a great Christmas and a great 2019 as well.